Good morning, everybody. Mike Vacchi for PrincetonTrader.com with your Tuesday morning pre-market webcast. Okay, we're looking at a daily chart of the ES, and I tell you what, everybody, we're in a situation now where we had the 1524 half area, and that was a potential double top. But as I mentioned yesterday, and it continues to play out with every single one of these long-tailed candles that you see, the bears simply cannot follow through. You had the 24 half level. Let me tighten up. You had 24 half. We had that big down day. We topped out at 24 half. We punched the lower band. We did it 2 days in a row, and we started to rally. And that's expected. You punch the lower band 2 days in a row, there's going to be some kind of a relief rally. But it's up to the bears to contain that. They have to contain it. And where do you contain it? You contain it at the middle band. Couldn't do it. Came back up. We did the 1524 halves, and the middle band on that particular day was support. Then what we saw the last 2 days, Friday and Monday, were dips. One of them as deep as 14.99 on Friday, which is a great chance to take some off if you're still left over short from before, and closed near the highs. Yesterday, the situation we find ourselves in now is, by the time we got into yesterday afternoon, things were simply too thin. The bears couldn't push, and that allowed the bulls to get through the critical 24 level and close on the highs, and we're seeing an extension of that today. So the bulls are following through. They're doing what they need to do. There's nothing on this chart in the short term that tells me that we aren't going to punch the upper band before we reverse. And we could punch and run. I mean, there is, there is some resistance up in the 1634 to 1636 area. I've got resistance up the 1534 to 1536 area, and then up into 1542 and 1554. You've got the beige. You have ISM today at 10 o'clock. That could provide for a dip. You've got beige book tomorrow, and you have the non-farm payrolls on Friday. And if you look at recent history, what we've seen traditionally is the market get walked up into the jobs report. And if that's what we are in the beginning process of now, we could see those higher areas as we move into Friday. So, the bears, it's going to take some news. It's going to take some news, or it's going to take a punch up through that daily band. You're going to need ticks. You're going to need the kind of things that you see when you get some real blood in the streets in order to affect that kind of a reversal that the bears want. Because right now they just don't have any push. They have a push for maybe half a day, but they just can't follow through. And if you can't follow through on this move, if you can't follow through after a true double top and a move 25 handles down, if you can't hold those 25 handles, at least continue to sell those rallies and keep these candles in the bottom half, you've got a real consistency problem. And if the bears can't be consistent, if they keep taking days off, as I always say, the bears can't take any days off. If the bears keep taking days off, then the bulls will run with the ball. And as you zoom out on this chart, what this all looks like here, while very calamitous in the moment, is a simple pullback to the 50-day exponential moving average, finding support, and heading back up to the upper band. Sometimes you just have to look for a market, look at the market for what it is. And that is what I see, and that's what the charts, that's what the charts tell me. When we punch the upper band, then we'll start discussing reversals and moving back to the middle band. But we aren't there yet. The ball's in the Bulls' court, and they are running with it. Okay, everybody have a fantastic day. Mike Vacchi for PrincetonTrader.com. I'll be back tomorrow morning with another webcast. Trade them well, everybody.